Freedom really is this simple.
And welcome back to Traders Freedom and episode number 3 of our how-to video series, where we hope to show you in just a few minutes that freedom really is this simple. So in this episode, we're going to pick up where we left off at the end of episode number 2. You've typed those 5 easy pieces of information into the user inputs box. You've clicked on that big blue Analyze button, the only button on the screen, and you currently have Freedom's algorithmic results in front of you. Now what we're going to focus on in this video are Freedom's algorithms and its trade signals, and how you can use this proprietary data to find outstanding trading opportunities. So we're going to take a look at Freedom's most important ones. Metrics that you should have a decent understanding of if you've completed episodes 1 and 2. And if you haven't, I strongly suggest you go back and watch them first. And by the end of this video, our goal is to make you feel confident that you fully understand these and that we've also answered any questions that you might still have about any of the tools and the terminology that you're adding to your trading toolbox. So we're going to go back and begin with the key data points that you're going to see over and over again in the algorithm summary box, the algorithm summary results table, and eventually in the trade details table. Every time you use Freedom, anytime you analyze any stock, because this is the proprietary data that you will use over and over again to find opportunities that you can take advantage of tomorrow. So once again for this video, we're going to use the same parameters in the user inputs box. We'll begin with ExxonMobil as our test stock, January 2020 as our test period, $10,000 as our investment size, and $10 as our commission amount. But just like we said in episodes 1 and 2, you can choose any stock, any start and end date, and any investment and commission size you like. Now I just need to reiterate again, we just randomly chose these values to see here today, just as examples for this how-to video series, just in order to demonstrate to you how Freedom works. So it's very important that you understand that these are not recommendations in any way. You choose your stocks, you choose your dates, and you choose your dollar amounts. Good. So now that we have the legal requirements out of the way, back to the good stuff. The stock analyzer. And one button, and in less than 5 seconds, boom, you've got your analytic results right here on Freedom's main page. The same page that you have been logged into since you logged into Traders Freedom. And what you're going to see in these results are some amazing Freedom subscriber only trade metrics, because these are proprietary data points that you're not going to find anywhere else. And as a Freedom subscriber, you could even log in and recreate these results I'm going through now in just a matter of minutes. So you can be absolutely sure that you totally get how powerful Freedom and its proprietary data is, and how simple it is to use the application. Again, because everything's on this one page with one button in 5 seconds. So first, we're going to start with the proprietary data that you'll see here at the top in the algorithm summary box. And it contains critical details like how many of Freedom's 16 algorithms are signaling long, short, or out for the next day. In the case of ExxonMobil, 2 longs, 10 shorts, 4 outs. How many of Freedom's 16 algorithms made or lost money during that time? In the case of ExxonMobil, 15 out of 16 actually made money. And how you would have done if you had just bought and held ExxonMobil stock and not followed any of Freedom's signals during the period you chose. In the case of ExxonMobil, a loss of almost $1,500. So let's talk about long, short, and out first, because this is the fundamental key to Freedom's trading approach, because it buys and sells any stock that you choose multiple times during the period that you've chosen. And then those once-a-day daily trade signals that you get each evening are for single stocks, 1 signal per model per day, with a model being defined as a stock plus an algorithm equals a Freedom model. And you get those signals each evening. So you will get a new signal to either buy or sell or stay out of the stock you've chosen each evening. And by doing so, you'll be quote unquote flipping in and out of that same signal stock a number of times throughout the duration of the trading period you chose. So let's look at those three signal possibilities. Out is pretty easy. Based on the current trading patterns that Freedom's algorithms have detected, it's not sure what the stock is going to do next. So you get an out signal to reduce your risk of the unknown and to protect your trading capital. Long. Well, that's pretty easy too. Based on the current trading patterns, Freedom's algorithms believe that the stock is about to go up. So you get a long signal to buy it in anticipation of the move upward with the goal of selling it for a profit eventually. Short. Short's not quite as easy to explain, and it can often seem really confusing and sometimes really scary too. So what we're going to do is we're going to break it down into its actually pretty simple parts. And hopefully this will make it less confusing and less scary. With a short signal, based on current trading patterns, Freedom's algorithms believe that the stock is going to go down. So the system signals for a short trade in anticipation of the impending drop, with the goal of exiting that short trade with a profit eventually. And here's how it works. Short step number 1. You get out of the stock if you currently are in it by selling it. Short step number 2. You borrow the number of shares of the stock that you want to short from your broker, and you sell them the exact same way you would sell any shares that you already owned in the open market and for the highest price you can get. Short interim step. You need to make sure that your broker has that stock in his inventory so that he can lend it to you and so that you can sell it. And short step number 3, assuming that you are able to borrow it, you sell it, temporarily giving you more money in your trading account. We okay so far? That wasn't so hard, was it? You get a short signal for one of your stocks, you borrow shares of that stock from your broker, and you sell it into the market for the highest price you can get. And the result is you get paid. Now, for the maybe not so easy part to explain, which if we do this right, hopefully you'll see it really isn't that difficult at all. Part number 1. We assume that you are able to borrow the shares of the stock you want to short from your broker, and that you've already sold them into the open market and got the highest price you could get. Part number 2. At some point, you're going to get an out or a long signal, meaning it's time to exit that short trade. Part number 3. To close out your short trade, you need to buy the same number of shares you borrowed on the open market for the lowest price you can. This is how you complete your short trade and get back the borrowed shares you need to give back to your broker. And you measure the success of your short trade by the difference between how much you received when you originally sold the borrowed shares minus how much you paid to buy back the same number of shares and give them to your broker. That means if the price you sold the borrowed shares for was greater than the price you bought the shares back for, that would mean the stock price dropped during your trade period. So you've just completed a winning short trade. But if the price you sold the borrowed shares for was less than the price you bought the shares back for, well, that would mean that the stock price went up during your trade period. So in effect, you've actually just completed a losing short trade. Now, the problem most traders have experienced with short trades is not having a plan for when to get out. First, the stock they shorted began to rise. Second, the stock price reached the price level that they originally sold the stock for when they opened their short trade, meaning that it was about to become a losing trade. And traders don't like to lose, so they just sat there staring at it as it went up because they didn't have an exit plan. Third, the stock price begins to accelerate as it climbs even higher, which means their losing trade is now going from bad to worse. And traders definitely don't like that. So they stay in their position thinking to themselves, well, it can't keep going up like this. I mean, it can't be that wrong. It can't get any worse, can it? Oh yeah, you can be that wrong. You can be wrong for quite a while. And it can always get worse. And your losses will mount and your anxiety level will rise. Now, there's even an anti-shorting school of thought out there that says, well, shorting stocks, that's just evil, bad, and wrong. And it's incredibly risky because you could lose an infinite amount of money since the price of the stock you shorted can just keep rising. It could just keep going on forever. And that sounds like scary stuff, doesn't it? Well, that's why freedom is a system based on mathematical computations and our proprietary algorithms. And it leverages its quantitative analytics and uses its artificial intelligence so that it always has a plan. And that plan consists of either long, short, or out. A new signal every day. No maybes, no let's sees, and if you always have a plan, the fear and the greed that traders have to battle against all the time don't have as much of a chance to take over. And that is the simplest definition of a short trade we can put together for you. And it's really important that you understand it, because freedom's approach is entirely based on making money as stocks go up and as stocks go down. And you make money when stocks go down as a result of your short trades. Now, you can still make a lot of money using freedom signals, following its long signals and buying the stock, but instead of going short when you get a short signal, just getting out to protect you against the drops in stock prices. But you can make even more money if you use freedom signals and make it short trades as well. Because in spite of what you may have heard, stocks don't always go up. Plus, every trading day, no matter whether the stock indexes gain or lose, there are some stocks that go up and there are some stocks that also go down. So shorting stocks is an opportunity for you to take advantage of. When stocks do go down, and stocks, believe me, will inevitably go down. Now, the benefits of shorting stocks are clear. It's also why you'll quite often see that Freedom's algorithms, their trade results far exceed the profits you'd realize from just buying and holding the same stock throughout the entire period that you chose. Because stocks just don't go up for 30 days in a row very often, or whatever time frame you choose. And sometimes during that period, stocks go down a lot, for a lot of days in a row. While the trader who's shorting those falling stocks during those down a lot periods is often making big profits. Shorting also pays off when you compare its results to the example of a stock that might start off really well and goes up 10%, only to see it then fall back 10% over a couple of days. And then by the end of the trade period, well, it hasn't really made a dime, and it seems to have done nothing at all, because in the end, its price is right back at virtually the same level that it started that period at. But the freedom trader who followed that model's long signals for the same stock made money as the stock went up that 10%, and then also made money following the model's short signals as the stock fell back another 10%. So the freedom trader who's taking advantage of those short trades could be sitting on a very profitable combined almost 20% gain by comparison. And that is definitely not doing nothing. But for now, we hope this detailed breakdown answers any of the initial questions you might have had, and it helps you to understand the fundamental pieces of a short trade. And we also hope that this clearly illustrates why the short signals you're bound to see in the trading algorithms and models that you choose are so critical to enhancing Freedom's performance. Now, the only other item in the algorithm summary box that might need a little more explanation is buy and hold. Simply put, Freedom calculates this B&H, or buy and hold value, each evening and shows it to you just for the sake of comparison. But be absolutely clear, Freedom will never generate a trade signal for any stock suggesting that you just buy it at the beginning of your time period and hold it till the end of that period. But as a reference point, you could use this buy and hold value and compare it to each one of Freedom's algorithmic model's returns over the same period of time. The buy and hold value represents the hypothetical return you would have seen if you'd taken the same amount of money you specified up in the investment field, bought as many shares of the stock as you could at its opening price on the start date that you chose, and then held all of those shares in your account right through the end date that you chose, meaning you'd never sold the stock. So if you feel that the buy and hold value is a useful data point for comparison's sake, there it is. Use it if you think it will help. And there you have it again. In a slightly longer period of time, But in the short time it took you to watch this how-to video, we hope that you've seen again that freedom really is this simple, and that all you will ever need to do is complete those 5 simple fields on the Stock Analyzer page, press that Analyze button for any stock in any period every time you use freedom. So next, in episode number 4, we will walk you through how to use the data in the trade details table, how to use it to your advantage. Because each one of Freedom's 16 algorithms pop up its own historical trade data whenever you click on any specific algorithm row. This is the proprietary data that can help you decide whether now is the right time for you to buy or sell the stock you picked, and to follow that Freedom algorithm's trade signal for the stock you picked the next day. So we're going to show you how to evaluate these trade signal metrics, and then how to use them to help make smarter trading decisions. But remember, this is all data that you'll only see on tradersfreedom.com. And you will see this same proprietary data every time you use Freedom to analyze any stock, and always in the same 3 places: the algorithm summary box, the algorithm summary results table, and the trade details table, with each subsequent section displaying more details as you drill deeper down, searching for the best trading opportunity for the stocks you choose. And all this quantitative gold is only available to you as a Freedom subscriber, because this data is entirely based on Freedom's proprietary algorithms, so you couldn't possibly find it anywhere else. And the more you use Freedom, whether you're making actual trades or you're starting out and just tracking trades on paper, Freedom and the proprietary data its system delivers to you every evening will very quickly become a major part of your regular decision-making process. And you'll soon find that encompassing the metrics that Freedom offers you into your decision-making can absolutely help you to make more informed, better planned, and less risky trading decisions. And that journey begins by helping you to identify profitable trading patterns today that you can take advantage of tomorrow. So that's it for How to Traders Freedom episode number 3. Please let us know your thoughts in the comments section below. Press like if you learned something new or something more here today. Press subscribe if you really liked it and you want to be notified when any new Traders Freedom videos get posted. And if you do like us and you do decide to subscribe, please tell all your friends too, because they're your friends. And that's what friends are supposed to do for each other, right? Thanks again so much for watching, and bye for now.
Freedom really is this simple.